following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. From the offices of Duke & Duke on South Broad Street in Philadelphia, Pennsylvania. Folks, there's trouble in River City. I posted the first chart in here showing you back on November 20th. And, of course, we made new highs on the NASDAQ last Friday. You can see the new highs that were being made, the ratio. Folks, let me tell you, this thing is so bearish that is absolutely unbelievable. The next one that Mr. Z just pointed out that our good friend Norm Winsky from Astro Trends again nailed a high. That's 4 in a row. So he's definitely going to be keeping as our guest until he misses one time, and then we will write him into the history books with myself and all the other guys that have missed the tops. But he does some great work. There's no question about that. But the thing is, you've got to look at something here, folks. If you have a 401k, if you have some money in the markets and you've bought into this stuff, what these charts are telling you is that this market is basically run by about 150, maybe 200 stocks at the most. Those are the ones that are really running the, running the show. The next chart I want to show you is even more descriptive of what's going on, and that's the one that shows the new highs and new lows. Look at the right-hand chart, folks. I know it's kind of small, but I'm not able to expand it too much because of technical difficulties of being computer challenged. But anyway, if you look at this far chart, I wrote there in a green box there, new lows expand. Look at that. New lows are expanding 2 to 1 when the market's going into new high ground. Boys and girls, this is not a good thing. I mean, this tells you that the overall market is in big trouble. It's only a few stocks that are making it run, the NASDAQ stocks. Now, what we're going to do is we're going to have a special meeting in Clearwater at the Chipotle Mexican Grill very shortly. Just as soon as they get their kitchen cleaned up, we'll be able to get in there for our meeting. But that'll be in the future. I'll let you know when that finally happens. So anyway, we will keep an eye on some of these other things, but this breadth is just absolutely, absolutely horrible. Now, as most of you know, here on the West Coast in California, we've had a tremendous terrorist attack in San Bernardino. It's really bad. And it brings back one of someone reminded me today, my friend from London, about they interviewed George Bush 2 or 3 days after 9/11, and they asked what the American public could do, to help, the American people. And he said, go shopping. And he meant it too. And the reason for that is you've got to think of the old Scottish proverb, the coward dies 1,000 times, the brave man dies but once. So you don't want to live in fear. Remember Anthony Robbins' acronym for fear: false evidence appearing real. 95% of all your fears never come to fruition. So just keep that in mind. So don't be afraid. Don't stop going to conference. Don't stop going shopping. If your time is up, your time is up. There's nothing you can do about it. And just try to be aware of what's going on. They're saying that now someone's mentioning here in the den that the people at CMGC, they didn't get sick from our food. Well, you ought to tell the 30 people that got sick, because that's where they ate. And I don't particularly like Chipotle Grill. I like it. I'm a Taco Bell man myself, but what do I know? Okay, let's get back to the markets, folks. We have a 786 retracement here at 2050 in the S&P. We're very, very close to it. And if we go below that 2040 level, oh, that is going to be so bad technically, because that's going to be a total false breakout. And when we went up above that, NASDAQ making new highs, and then it's going to be, I think it's going to be pretty nasty. This breadth index, folks, is just so bearish that you just literally, it should scare you. It really should, because it's really telling you that there's not a lot of buying in some of these stocks, and with volume really low, especially this time of the year, if a big selling does come in, they're not going to be able to handle it, because there's not going to be that many buyers out there. There haven't been on the way up, and when prices start to go down, fear sets in, and then we'll see, you know, what's going on with that. One of the questions that we've had asked this morning is, how low is crude going to go? And I think it's going to go as low as it wants to go. I don't know where it's going to go, but once we broke that 38.86 yesterday, folks, that was a pretty negative sign, because that was the 1.618 on the daily, and really there's not much else down here. So you just have to sort of wait and see if things are going to see what's going to happen with it. The question about gold has arisen. We're waiting. There's a possibility that we could make the 61% retracement of this move. We had a $34 move off the bottom, and we could make that 1060 level, which would be pretty much spot on to the 17 harmonic. The two harmonics in gold are 17 and 34. So if gold goes below 1060, then something's really wrong, in my opinion. That would be, that's my line in the sand, as President Obama would say. But anyway, that's what I think is happening. And gold still looks okay. This is just a second-day correction after the big run that we had last week. And we'll see if it's going to hold above 1090. We're going to be looking at a lot higher prices. And if we get there really fast, they'll be even higher than what you might want to think. So just keep in mind that gold, in order to gold to really be bullish, it's got to get above that 1090 level. The main thing I want to cover today, folks, is that breadth chart, because that thing is really telling you that the market is incredibly weak. I mean, look how the new lows came in on the first down day. I mean, that's scary. I mean, people really want to see what's going on. And, you know, we're seeing some things in the commodity markets. You know, you've got some of these markets under another great deal of pressure. But, you know, we're still holding some of these up above the levels. I still think we're going to make a big bottom in commodities sometime, you know, after the first of the year would be my guess on some. So, you know, they will not bottom altogether. You know, you probably already had a bottom in sugar and coffee and cocoa and some of these other things, but maybe gold and silver maybe will bottom later. I don't know. Maybe this rally will do it. I'm not sure. That's why I do one pattern at a time, and that's to keep it as simple as possible. I don't, someone's asking me what year. I'm thinking maybe 2016, if there is going to be a big bottom in here, because no one will be expecting it, and that usually when it occurs. The other market that I really have on the radar, folks, is the crude oil, because there's so many people bearish that when it does start to rally, heaven forbid, you'll see probably a 20% move in one day, which is not much. That's about $6 or $7, but that's easy to see in crude oil if a short covering rally occurs. It could be a conflict in the Middle East or in the Ukraine or someplace like that. There's so many spots in the world, United States, where there could be problems. But that's what I think will happen. But there's no sign of it right now. There was a sign on Friday, but with the big move down, making new lows in gasoline and in heating oil and also in crude oil, that tells you that we certainly have not bottomed as yet. We've talked about the cyclical that was brought to our attention by our good friend Jim Flanagan from GAN Educators. I want to bring that one up because that's similar to the one that we were looking at with gold that Larry Edelson showed us with his neural network that happened to be spot on. And so we want to watch this one, and you'll be able to see that there's a high probability for the low to be formed in December. And so we're in December, so we want to be watching for it. I don't see any signs of it as yet. The only thing that I keep as my radar is I watch the Canadian dollar versus the U.S. dollar, and of course the Canadian dollar is getting incredibly weak, and we're almost at the large ABCD on the monthly. It's got a little bit more to go. and maybe 80 to 100 pips, and then we'll see if that's going to be the big ABCD. And these currencies they're pretty good with these patterns and numbers, because you can't play games with them. You can play games with them for a short period of time, but not from a not from a low area that you might think. So we'll see. Anyway, we will keep an eye on all these things, because that's what our job is here at TFNN, to try to give you some good ideas of looking at it. Now, we did buy the gold at 1050, and below 1060, you just don't want it. So put a stop at 1058, and we'll be able to look at it. I've had a request from one of our friends in Canada to take a look at pot. And it's illegal here in Arizona, so I'm not really able to do that, but I know he means potash. Unfortunately, I won't be able to do that until the break, Mike, but I will take a look at it and see what it says. If I'm able to post it, it will be in a few minutes, because what I have to do is I have to set it up a little differently and then bring it into a TFNN and refocus it that way. So these are the things. We're getting ready to open here in the stock market this morning, whether we're going to get down to that level. Remember, actually the number in the S&P is 2052, and we'll see if that's going to hold it. Anything below 2040 then in that market is going to cause a big problem, in my opinion, but that's just my opinion, of course. And this breadth chart, as I mentioned, is just so very bearish that you just have to respect it for sure. That's the way that I'm looking at it. When we get to the euro here, I wanted to spend just a second here. We're getting gold to move up now. This is good. This is the first time we've had a nice little spike in gold here in the last day or so. We've finally rallied $10 off of the 50% retracement in gold. We might not get down to that 1060 level, but it certainly has at least started to move up, and it shouldn't get below 1060 now, given the fact that we've rallied $10 in just a matter of an hour and a half, which could be a sign that we're getting ready to see something pretty exciting happening with this. Someone's asked me what the bottom is in oil. I don't know. The bottom is when there's no more sellers. We're probably getting close to that point, but I don't see it as of yet. And I just think you have to wait till you see a nice 3-drive pattern or a Gartley or something. That's the only thing I have. A fundamental part of it, I understand so least about that it's just a little bit scary to me. So I would be very careful. I got off on the tangent here a little bit. I wanted to mention the euro. We'll probably have to mention that when we come back from the break, but I'll try to pull up a chart on pot, which is potash, and we'll take a look at that to see if it's any good. We'll be right back after these few words.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhoades, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've put in the chart for Potash, POT, and as you can see, it's making a big butterfly pattern down here at around 17.70 per share. That's about another 70 cents lower. That's the 1.618 expansion on this last big swing that we have. Below that, you can say goodbye, because that would be similar to the pattern that we had in crude oil yesterday when it broke 38.80, because that had a really strong cluster of numbers at that 1.618 level. We have the same thing here in potash at around 17.70, so that would be a spot where you'd have to give up the ghost if it gets below 17 would be my guess, because there's no bottom to some of these things. Well, there is a bottom, but it's at zero. But we'll keep an eye on that. So on the gold here, the real key number to watch for potential. We've had a nice move here of about $10 in the last hour or so, but we need gold on a daily basis to get above this 1082, 1083 level, because then we can attack the 1090. And this is a good start. I mean, we're really doing pretty well, but we still haven't even made a 61% retracement of the high that we made back on on Friday. And so what we want to do is we'd like to see that. Now we're only $1 or so away, $1.70 away, but if we go through that very, very quickly, then we've got gold on the run, and then it'll have a pretty good chance to see the thing that we've got. Oh dear, let me see. They want me to repost the chart for the. I'll have to do that at the break. I'll repost the chart for pot because I'm not able to do that while I'm going through the charts that I think should be covered for today. That's the bottom line of what I'm trying to do right now. The key thing I'm watching this morning is how the S&P is going to hold this 1052 level if we get there, because that is the 786 of the move from that we had down at 2040, and then we went up and made new highs in the Nasdaq. And so if we were to go below that 2040 level today, you're going to be looking at something really serious. And remember, we're going to see a day where we have a 1.618 expansion of our biggest move, which has been 369 points, and that's going to be, the Dow is going to be down more than 500 points in one day shortly. Well, there's a nice little timing tool for you, shortly. Not longly, but shortly. I don't know when it'll happen, but it most probably will. That's how the markets operate. They expand and contract. And so that's what you try to do, is to see what that last one was. That was happening all during the time of the market going down in 2009. We kept expanding down, with finally our worst day was down 777. That's when Secretary Paulson said that the government was not going to pass the Too Big to Fail Act, and the world was going to come to an end, and everybody should take their money out of the bank and run like hell. And guess what? Goldman Sachs ran to the bank, and everybody that sold out did a very, very silly thing. But anyway, the banks were saved for at least for 6 years. We'll see what's going to happen shortly here. But the banks are actually acting very poorly. We didn't even make a 61% retracement on this banking index on the way back up. It didn't take out the highs of September the 16th, which was a really key date. It didn't take out the highs of November 2nd, which was another key date, and that means your banking index is in declining tops. We had the same situation going on with the small caps, the IWM. Well, that's not hard to understand, because if we looked at the breadth of the market, we're making more new lows and new highs every day by a large amount. Then you're seeing that there's a lot of stocks that are going down in price. So these are the ones that are pulling the market down. There's other stocks, of course, that are doing, relatively well. The Facebooks and the Disney. Well, Disney's backed off a little bit, but the Nike and some of the others are doing relatively well, keeping the market up. And those are heavily weighted stocks. Well, they're price weighted in the Dow, and that makes certainly a big difference when we're watching these different things moving. Now, I want to get to the euro because I think it's important. I might be at the break before we get to it, and that is the euro has some really strong resistance up here at the 109.09, 109.10 level. That's a 61% retracement back from the high that we made on that Thursday right after the report. So this is going to be a real key spot, because where it stopped, 108, was exactly 382 of that whole move. We'll be right back. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
It's true. Life is all about choices. At EverBank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. EverBank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, this is Billy Ray Valentine for TFNN, also known as Larry Pesavento. God, I love that movie, Trading Places. I probably watch it once a week, but I sure have a lot of memories from that movie that from all these years I've been doing this, it still rings a big bell when I watch it. It's always very, very funny. We are very close to the 786 retracement here in the S&P, the E-mini S&P that most people trade. We came within a point. We're within a point or so is where we are right now. That number comes in at 2051.90, basically, 2052. So we're only a little off. But we're starting to go through it right now. That's what my beepers are telling me. We're hitting it, so I have to do a little something here to see if we've had this first part of the morning here is the crazy part of the morning. People bring their orders in early in the morning, and that's usually not the time to do anything, is right on the opening. So it's best to wait, for a short period of time anyway, to see, because if we go crashing through this number, at the 2052, then you're going to be looking at something, testing the 2040, what we had last week before we had the big rally. And that means that whole failing rally was done with just smoking mirrors. And that's pretty much what happened. I happened to post in here yesterday the work from Art Cashin about that smoking mirror phenomenon based on, the algorithmic trading that they're using and automatic trading, how 70% of the volume is supposed to be done through the stock exchange that way. I don't know the actual figures. That's what they tell us. But it makes sort of sense because they don't need, a specialist or anything. They just hook up the computers and let the computers, do their buying and selling for them. And so it takes away, some really good information from the market. But we live in different times now because of quantitative easing. So just keep in mind that that's the possibility that we're looking at right here. So we'll see. Well, we hit that number right exact. We're right there right now, 2052.50, and we'll see how it's going to hold it up. The Nasdaq is still it's below the 61% retracement because it's been the strongest. The German DAX, which I watch, has already broken below the 786 retracement. So all of those, are telling us that that's something that we should keep in mind as we're watching this. Okay, the gold had a little bit of a rally. We rallied from 1065 all the way up to 1078. So we got a little $12 rally. That's not very much. We really need gold to get above the 2083 level, and then it's got a chance, to attack that old high that we made on Friday at 10. It's not 20. It's at 1083, and at 1088, if we get above that in the gold, then it's got a chance to go a lot higher. I still think gold has a chance, but believe me, folks, it's not running to the races as of yet. And if we close below 1060 in the gold, I would say, stand aside because all these other commodities have come right back down again. We saw that in wheat, corn, and beans yesterday. Silver did the same thing. Copper sold off. So all of these commodities are still under a great deal of pressure, and there's no sign of a bottom. Even though we are getting relatively close, there's still no really good sign, of a bottom in there anyway. So you want to be timeout here. God, almost made a mistake. Just a second. I wanted to show a chart here and I got the wrong one. Okay, let's put that in there. There we go. Alrighty, and now what we want to do is to look at the next thing I want to look at is the euro. Watch the euro, folks, at this 109.10. We got to 109 in the euro off the bottom, which was 110 pips from the last correction. In other words, the market, went from 105.20. We rallied to 109.80. We backed off to the 382 retracement, which was just under 108. And now what we're doing is we're making a 61% retracement of the high from last Thursday. So if the euro is no good, it's getting ready to go back down again, at least to test maybe the 61% retracement, much like what gold has tried to do. So just keep in mind that there's a possibility that could be occurring. So keep your options open, and remember, this is pattern recognition swing trading. You're not buying something and holding it for 4 or 5 years. I know you folks that have held stocks for 4 or 5 years through all of this have done incredibly well, but there comes a time when the climate changes. And so be afraid, be very afraid, because if that happens, these stocks, as you know, from what happened in 2000 and also in 2007 and again in 2011, 2011 wasn't too bad, but you have these, really big sell-offs. The market lost over 70% of its value in 2007, and you certainly don't want to set through that, especially because real estate in some parts of the country has come back pretty good, other parts not so much. So these are the ones that we want to be watching here. So we'll see what's going on here. Okay, the question that someone has asked me about the sugar market, sugar the sweet. Boy, I haven't seen I had to do a sugar chart for this gentleman because I hadn't seen one in a very long time. And we will pull it up here. It's got some very nice patterns in sugar. This used to be the commodity show on Thursday, but we'll see. Anyway, as you can see, we had a beautiful 3 drive to a bottom pattern back in August the 24th, when the stock market was under a great deal of pressure. And then you see the market started up. And where we are now is we are forming a 3 drive to a top pattern in the sugar up at the 16.50 per pound level. That's another penny a pound higher than than where we were at this time. I haven't updated the chart yet, but my guess is that target is still valid. So you want to watch sugar at 16.15, because it gets there. That's going to be a really nice pattern. You have a 3 drive pattern. And if you also looked at it on the long-term daily chart going back over the last year or so, that's going to be a 61% retracement of the high we made in 2014. So we got a bunch of numbers, that are coming together at that time. I wanted to show the, I know what I wanted to do. Just a second here. I wanted to show the main chart here on the Fed funds rate, because this is the one that is really, I don't understand why the Federal Reserve is not going to raise rates, because this is the Fed funds rate, which is the rates between the banks. And as you can see, the interest rates are going substantially higher already. We're already we're already above the interest rate that we had back in early April of 2009. So rates are going higher. It's just a question of when the Fed announces it. They've already announced it at American Express and all the other places, the banks where you do your business, and you'll see what we're watching, with some of these things. So the bonds really have had a wild couple of days here, folks. We went down, as you recall, we had a big sell-off in the bonds and notes on that Thursday. And then since that time, we've gone back and we've actually taken out the highs of last Wednesday before the big break. I mean, that's just an up and down market that is unbelievable. And folks, that's real money. That's the biggest commodity market that is traded as far as open interest and number of contracts. The bond market is huge. And so we went down 5 points and up 5 points. So this is not for the faint of heart, as they say in the commodity trading circles. Be very, very careful. Rates are going higher, but the bonds have already been oversold, and they could easily rally when the Federal Reserve, says that the rates have been increased, and then they will go down. So you want to be able to, keep an eye on it anyway, because that's what it looks like could be happening. Now, one other thing that you should think about when you're in some of these markets. Let me get this. I wanted to show you the emerging markets, how bad it really looks, because this is indicative of what that breadth chart is telling us with the New York Stock Exchange stocks and the NASDAQ and all the others. But look how weak the emerging markets are over the past year or so. I mean, it's just amazing that it could only rally to a 382 retracement after our low in August. I mean, we went up and made new highs in the NASDAQ, but the EEM could only make a 382 retracement of the high from April of 2015. I mean, it did nothing off the high in 2013 or 14. So this market is incredibly bearish. I mean, it really has a lot of bearishness in the market. So remind yourself that when they try to tell you how great it is in some of these other countries, that's not what is actually happening. Now, so far we've held the fib point at that 2050 level. We've already rallied 9 points, which is not bad, and we'll see if it's going to have any more of a rally than that. As a matter of fact, the early morning, as I mentioned, is the hardest time. Unless you've got a good spot to pick to be a buyer or seller, because a lot of these people put their orders in the night before to be done on the opening, and that's why that opening first half hour or hour is really tough. And these stocks, in the posts that they have at the New York Stock Exchange, I think there's 13 posts. They open these stocks not all together. I mean, some stocks, well, Coca-Cola will open, at a different time than Nike does, because the specialist is still doing his thing. So you got to remember that when you're watching the opening, on some of these things that we follow here each day. But it's still early in the day, and not really much is happening. The trend in the stocks is still up. There's no question about that. We would have to go below the lows of 2040 that we mentioned earlier. That's about 20 points from where we are, right now. So those are things that you need to keep in mind. But below 2040 in the market, then you're looking at something that is going to be, a lot scarier, as they say in the trade. So watch that very, very closely. Now that we've hit the 786 in the S&P, the mini S&P, the first question you should ask yourself is how much we're going to rally. And we've already rallied almost 10 points off the bottom, 9 points right now off the bottom. And the harmonic number in the S&P is 10 points. So we should see a print of about 2060 would be my guess. And if it goes charging through that, then that would tell us that, yes, this was a major bottom here today in the oil, and we're probably going to be working in the oil business today, doing tattoos, and the rest of the time we'll be making lampshades and license plates and pencils at the Florence University Retraining Center in Florence, Arizona, also known as the Tucson Territorial Prison. Okay, now, want to get off the bat here. We did on the euro. We did hit that 10. We hit 109, but I was looking for it to go to 109.09. We missed that by just a little bit, so we'll have to wait and see if that's going to be anything of any significance at all. All right. Oh, a question on Apple. Well, folks, I think Apple, let's just pull up a chart here and see if we can put it in the den. We'll take a look at it. Boy, the time's going very fast today. I do want to cover something very important because of what Norm Winsky will not worry about Apple. Apple looks lower to me, just like all the rest of the stocks do. The only way I could get bullish today, folks, is if we turn around and tear out those highs that we made on Friday. That would be around 2105 in the S&P. Then I would have to get on my trusty little burro named Luigi, and Luigi and I would ride out into the desert with all of our camping tools and camp out for a bit, looking at the stars, trying to learn the meaning of life. But I don't think that's going to happen, but we'll let the charts tell us if that's going to be the case. If we go below the 2040 level in the S&P, you could just about sell anything and make money. You might get a bounce after that, but get ready to start selling things, because that's where the real money can be made, because it's a holiday type atmosphere for one thing on Wall Street, with volume relatively low, and you've got virtually nobody wanting to sell stocks. And so that can be an ideal situation. I've lost data. Shut the front door and raise the rent. Doggone it. Oh dear, I don't know if I'm even being heard. Shut the front door and raise the rent. Nope, I guess I'm out of business. Well, what are you going to do? I guess I'll have to sing. Can anyone hear me out there in Radio Land? Aha. All right, there we go. Okay, we're back in business again. Evidently, we lost a little bit of electricity here. And so we'll take a little break. We'll come back and give a little recap of what we're looking at here.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhoades, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, folks, I'm going to end the show with a chart from Jim Bartoli, going back over the last 20 years, well, especially during 2007 and in 2015, showing the similarities. The main thing to watch is on the right-hand side for 2015. You'll notice how the market rallied into a Fibonacci retracement. It took 16 weeks. We're in the 14th and a half week since our bottom in August. So we're right in the zone where this thing should start down. Well, we've already looked at how bad the breadth actually of the market is, with new lows exceeding 2 times what new highs are on a daily basis, and expanding on a daily basis. So, and that's with the market going up. You can imagine what it would be like if we were to have another downdraft where we were down, 200 points. Well, you're down 200 one day, you're up 369 the next, and then down 200 the day after that. So you've got a situation where you can see a whole lot of things, jumping around, doing these different shenanigans with prices. But this is a very bearish situation that we have here with this Breadth Index. It really is just flat out scary. So if you don't understand it, talk with your advisors if you have your 401ks and stuff, because if we go below 2040 in that S&P, I would certainly not want to be long stocks, especially after a new high in the NASDAQ with no follow through with any of the indices at all. And with the transportation and utilities both going down, this is a situation where we're going to have higher interest rates and lower stock prices, would be my guess. But the key here is we need to get below 2040. If we do that, then we have a chance, for the market to drift lower. That's the key level that we're watching here to see if, in fact, it does hold that level. I'm going to have a mystery guest on next week. The mystery is whether I'm going to be able to get him on or not, but he's a relatively famous person, and we're going to see if we can get him on. I've got to call into him. I've known him for a long time, and he's a really nice fellow, but to get him on takes a little bit of time because he's extremely busy. So live every day in an attitude of gratitude, and may God bless, and let's have lobster and crab.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.